I'm eating 25% slippage. Well, never mind. I don't care how good that product is. I'm out. I'm never touching this place again, right?
This podcast is for informational and entertainment purposes only and is not investment, legal, or financial advice. Opinions are those of the host and guests and do not reflect any affiliated entities. Investing involves risk, and past performance is not indicative of future results. The host and guests may hold positions in discussed securities. Now, please enjoy the show. Alex, thank you so much for joining me today. Super excited to chat with you. All right, Alex, you are the founding contributor of Aerodrome. Aerodrome is a leading decentralized exchange built on Base. Previously, you built Velodrome, which is a leading DEX on the Optimism superchain. All right, so to kick it off, I want to do something a little spicy. Are L2s good or bad for ETH? Not like Ethereum, the network, but ETH the assets.
Great question. Yeah, very, very spicy. I mean, I'll preface my response by just saying, I think there are like people who think about things like this in far more depth and detail than I do. So I generally just think about it in the broad strokes of things. So my perspective on it is, as of right now, I understand why people are concerned, right, about the overarching value proposition, right, and all of this activity scaling on layer twos, and potentially is enough of that value flowing back to the layer one. And by virtue of doing so, of course, flowing back to ETH, the asset itself. I think my point of view on it is that for Ethereum to win the network and the token, it has to be able to scale to such a higher level, right? Orders of magnitude higher level than where we are now. Like, as Jesse says, like, we literally need to bring the world on chain. And we want that chain to be Ethereum. So the L2 scaling roadmap, right, and the economics around it, I think are built on the idea that to do that, we need these fast, cheap L2s. And those L2s also need to be like, for instance, profitable for big businesses to come and build their own L2s, right? It's a great proof point that like Coinbase makes a fair amount of money with their L2, because we want every Fortune 500 in the world to be looking at applications of blockchain technology and the ability to build their own L2 on top of Ethereum, not their own blockchain, not on Solana. We want them doing it on ETH. So while the current economics may be a bit concerning, I think we are just in the messy middle of it, right? The entire bet is that we have hundreds of chains like Base doing 100x what they are doing today. And if we do that, then the economic issues go away. But if we are not doing that, like if we are not scaling ETH to that level, guess what? The economics are also very bad, because it's not like you're going to be able to go translate the activity even on the existing L2s, get it all in the L1 and drive gas prices up and all that sort of stuff. That's just going to go elsewhere. It's going to go to other chains, it's going to go to networks. It means the next big company to come and build a chain is going to do it somewhere else or in some other way. So for me personally, I think they are very good. I think we are in the messy middle of this process. I think the economics only work if we continue on this path. I think like this is where I defer. Is the exact split perfect today? I don't know. I'm not sure, but I can see the end goal, and I think we are placing the right bet, because we'll lose if we don't bring the whole world on chain through ETH, and we'll lose to other networks, and that is even worse for ETH than the current situation.
So in your opinion, we need even more L2s and also increased scalability of ETH proper, but even more L2s, even though, let's say that the L2s are giving, I don't know, it's such a small slice of the fees that are generated on the L2 is going towards ETH proper. So like we're talking, I don't know, like 100, you said orders of magnitude, but like 100x more L2s and more activity in order for it to be able to fund Ethereum properly.
Yeah, I mean, like Coinbase put out in one of their earning calls, right, that they expect like, what is it, like 10, 20% of global GDP to come on chain in the next 10 years.
That'll do it.
That'll do it, right? And we want to be sure that as much of that global GDP is happening on Ethereum, right? And the roadmap we have right now, the broad strokes of it, I think is aligned to doing that, right? We want Robinhood to have an L2, we want BlackRock to have an L2, we want consumer companies to come in and have L2s, and things like the superchain will help abstract away the UX of it. But we need that level of GDP. We need that level of engagement from traditional businesses. We need Web 2 level numbers of users and activity. We need that on Ethereum, and we need the economics of that to work both for ETH, the asset, and for the companies, businesses building on top of it. And yeah, I think we have the right roadmap. We're getting there day by day.
I mean, obviously, you're a contributor to Aerodrome and Velodrome, so I can see why you'd want ETH or Ethereum to be successful. But what are your takes on other chains like Solana, Avalanche, etc.? Because you keep saying like we want Ethereum to become the hub essentially, but why not Solana or other chains?
I mean, it just goes down to if this is going to be global infrastructure, institutional level infrastructure that is credibly neutral, that is secure, that we can think about that level of giant proportions of global GDP living on chain and it being safe to do so. There's just no chain that is anywhere near a sort of credible position to achieving that, right? Solana is not decentralized, right? It is not neutral. And by the way, you cannot scale it entirely monolithically. They're going to have their own scaling issues, right? And so I think ETH is just orders of magnitude ahead on answering the most foundational questions that need to be answered. There's still a lot of work to do, but answering those questions such that it can be the place that this activity comes on. It's not to say that there isn't going to be other disruptive players. I honestly, like, my perspective generally on Solana is that every top line metric you see out of that ecosystem is massively inflated. So it needs to be taken with a giant grain of salt. But it is just not ready for this type of institutional level security and scale. And so that is why, like, we put our focus very much on ETH, right? We think institutions are coming on chain. We think real world assets are coming on chain. We think UpX trading is coming on chain, right? And we think that the primary venue for that is going to be Ethereum in any sort of short to medium time frame until like something absolutely new and insane, disruptive, emerges, if that's even possible. Or, we might all just be up against hard problems. And, while these chains might scale in slightly different ways, the map we've laid out on the Ethereum side is more or less the broad strokes of what any chain would need to do.
This is a bit of a detour from what we're currently talking about, but it came to mind as we're talking about scalability and whatnot. I've seen people on X say ETH moving to proof of stake was a mistake, and we should have stuck to proof of work. Do you have any thoughts or opinions on that?
Yeah, I mean, so I'll comment more on the mindset. So I feel like one of the biggest things that I've learned being in this space is that whatever the current point of view is that is like dominant in the zeitgeist, right? Like, and you get a lot of it from crypto Twitter, but you get it from like funds as well. You'll get it from crypto media. You'll get it from a lot of participants. All of it to me is like, it's always looking at what just happened or is happening now, but it's discussed in such a way as like, this is how things will continue to be. So it leads to people doing like a lot of overreacting, right? And it leads to people making a lot of bad decisions. And this will be sort of, I think, a part of our like story of Velodrome and Aerodrome, because this is part of it, is like trying to see ahead of the curve. But I think that shift, the reason why people think it's bad is just because of the short-term economic impact. because it's not as good as it once was, right? On some of those measures. When you look at the scale of transactions, TVL, volume, asset types, product experiences, like, and we are just going so far beyond, enabled in part by decisions like that. And we're just scratching the surface of what is possible. And that is like what I think about is like, we had to do it to get to this place. And I know that like economically, it's not yet delivering those dividends in the way. And again, people have this slightly backwards looking thing. But what it's unlocking for us is, I think, way more powerful. And so, yeah, that's like my perspective generally there.
So why DEXs? I mean, I think that there's so many things someone like yourself could be working on and building. So why do you decide to spend your time and attention building DEXs?
Yeah, it's a great question. So like, what are DEXs? I mean, DEXs are fundamentally like essential infrastructure for the on-chain economy, right? If you are tokenizing basically anything that can be tokenized, right? And that's from digital sort of native assets, so governance tokens and utility tokens and wrappers and all this sort of stuff. We're just tokenizing anything that can be tokenized. And now we're like stretching into tokenizing real world things, stocks and securities and derivatives. And we're tokenizing content, right, on Base with Zora. And we're basically saying we can tokenize any of these things and build these really rich, diverse markets, right? You need fundamentally exchange infrastructure for this to work. You need these economies and these tokenized assets and whatever they represent to be like deeply liquid, able to be exchanged freely in like size, right? For these economies to function. Because if you don't have that sort of liquidity and that exchange infrastructure, you could have an ecosystem, and we've seen this plenty of times. You launch a new chain, right, with very cool, interesting economics and security and speed assumptions. You launch that chain. And hell, maybe you even did a great job. You brought in some amazing builders building really new innovative products. But you as a user come to that chain and you're like, oh, I want to go try out, this new sports betting platform on this network. So I bridge that USDC in, and to go get the native token of this thing, I'm eating 25% slippage. Well, never mind. I don't care how good that product is. I'm out. I'm never touching this place again, right? And now that platform itself will not be able to grow, right? So it is literally essential infrastructure, and liquidity is like a necessary condition for the growth of like on-chain economy, on-chain ecosystems. And I personally just love the way in which it roots you at the very center of an ecosystem. And I love the way in which it also aligns your incentives with those of the broader ecosystem. And incentive alignment is something that we think a lot of. But basically, I get to wake up, every day and thinking about my own contributions to these DEXs, right? Aerodrome on Base, Veldrome on the superchain, as like our success very much is the same success with the network, right? Because if we're the essential sort of liquidity and trading hub of Base, then Base 10 times, that's very good for us. So what are we going to do? We're going to do everything in our power to help grow that network. Same with the super chain. And I love being just like that embedded piece. I love being connected to every project. I love like solving the core problems. So then the people who have really crazy, interesting ideas about new platforms, new use cases, new products, like we can sort of solve that root cause or that necessary condition for their success so that they can focus on the other stuff, right? Don't worry about your token being liquid. We'll help you with that. We'll be sure our product is aligned to doing that so that you can build the best whatever. Yeah.
So it's just like the biggest biggest piece of core infra, if you will. It's like the plumbing, the electricity, the roads of like this network or this city that's being built. And you guys want to build the best solution for that infrastructure so everyone else can flourish, essentially. Yeah, very, very cool. Also, when I was doing some research on you, I looked at your I found a bio of you. It said you had previously worked in politics, technology, and consulting. Now, how appropriate, it's incredible how now you're doing what you're doing, which I'm sure using pieces of all of that. So can you tell me, like, how did you go from that into, I think you first built Velodrome, I believe. So how take me through that process of the initial ideation and actually going through and building Velodrome out.
Yeah, it's so cool because even in describing, politics, technology, consulting, it's so funny because as I was going through that path, those felt like some pretty significant career pivots at times, right? Obviously transferable skills, but career pivots. Never really saw the connective tissue between them until I got to crypto. And I'm like, wow, yeah, every piece of this, from the political side to the technology side to all these different like business models and things like that, like all of this is coming together. I can apply all of these. So suddenly all the dots connect. But basically, the story is that, like, it was the pandemic. I think, like all of us, it was beginning to like burn out, get a little frustrated at my job. I was just like, probably frustrated about the world in general. I built a gaming PC because, like, well, if I'm going to be locked in home, might as well do some gaming. Haven't done that in a while. And then I had a friend for a long time who was like, telling me about crypto. And so finally I have this gaming PC. I'm like, oh, well, maybe I could set it up to mine some Bitcoin while I'm not, playing games. So I started mining the Bitcoin, and that was like the first big, like, holy shit moment, right? Because I was earning like hundreds of dollars, right? And then they were turning into thousands of dollars seemingly from nothing, right? Obviously energy costs, obviously I bought the computer, built it, but I didn't do it for this. But it's like, okay, this is nuts. Now I'm paying attention. And then it was like, so what do I do with this now? Right. And so it's like, well, move it on to Coinbase, right? And you can maybe start trading or looking at what some of these other tokens are. And then it's like, okay, now what can I do with these? Like, I'll bring them on chain. I've got them on chain. Like, what do I do with it? And I start getting into DeFi, right? And DeFi summer. And I'm providing liquidity. I'm staking tokens. I'm earning more yield on top of that. I'm like just watching the way in which, in this completely decentralized world, I can contribute value. Some that can be real value, some that can be like tangible, like on-chain value. It can be soft value. And like, I'm just putting my time and energy into figuring something out. It can be like starting to get involved in DAOs or things like that, that sort of value. And like the value is just being delivered back to me. I didn't have to interview for a job, like I didn't have to like do any of the typical things. It was just like, I was just floored by the fact that I could just do stuff online, and I was like making money. And I think that idea of like, I can be rewarded proportional to my contribution to a network felt just so disruptive that, then I didn't want to do anything else. So, I quit my job, didn't have a plan. I started getting more involved in some DAOs. I started like writing threads because it was like, I was writing threads out of like, I'm learning about this thing, but do I really understand it? Maybe if I write it, then people will like give me feedback if I really nailed it. And then if I did, maybe that'll be helpful. And before I know it, somebody pulls me into a DAO. And then as part of that DAO, we're attached to Solidly, which was Andre Cronet's DEX on Phantom. That was the basis for Velodrome and Aerodrome. And when Solidly began to decline, we saw the opportunity, right? Other folks in that DAO, like, potentially this could be changed, fixed, modified, and we could go somewhere else with it. So it was just like, completely unintentional, just like sort of following this path of like, this is interesting to me. I want to do more. And before you knew it, yeah, we were launching, Velodrome on OP mainnet. And by the way, it'll be 3 years since the launch of Velodrome, I think next week.
Wow. That's amazing. That's so cool.
Yeah.
Okay. So why do you decide to build on Optimism Superchain? Like what was the thought process behind that? Were you excited about that network specifically? You met some core contributors there, or because there's probably so many options for you. There's probably even more options now, but what was the thought process?
Yeah, so this actually connects back, I think, really well to some of the pieces we were talking about at the beginning here. So when we were realizing that solidly the existing DEX was likely not going to make it, right? And there were some issues in the economics. There were things very specific to the Phantom ecosystem. This is Ombre takes a hiatus from DeFi, so there's lots of things conspiring, right? But once we realized that that wasn't going to work, but the broad strokes of what Andre had built were right and powerful, then it was a matter of where do you go to play. And in that moment, it was basically this thing where everyone said, you have to keep building on alt L1s, right? You got to build on Avalanche. You should keep building on Phantom. You should maybe like go to Solana, maybe, or Ethereum mainnet. And again, this is that like looking at all the things that had just happened, because these were still the most active networks, right? It made sense. It was not looking ahead, right? And when we started to look ahead, I think what we saw is that if the market was going to go through a decline, right, and we started to see the early signals at this point, I think January 2022, if the market was about to go through a decline, then where were the networks going to be that were going to see growth, even as the rest of the pie shrunk, right? Because a lot of people move money off chain, a lot of people take a break, it's the cycle collapses, all that sort of stuff. But there are pockets that grow even as everything else is shrinking. And we looked at Ethereum L2s and we said, look, these combine the primary benefits that have driven this adoption of these alternate layer ones, right? They're going to be fast, they're going to be cheap, but they're going to do that while still building on the security assumptions of Ethereum and a part of this broader network. And so when we looked at the landscape of L2s, we saw Optimism as a place that had fundamental liquidity issues, right? It had a number of great builders, like Synthetics was there, Lyra was there, Thales was there, right? It had a great ecosystem, but that ecosystem's ability to grow was constrained by the lack of liquidity. So our bet was that even if things were going to shrink, L2s were going to grow. This was an L2 deeply in need of a product like the one that we had, and that if we win and we focused on winning there, by the time, all the big incumbents start to realize that they were looking sort of slightly backwards, that these products will have established such dominance on L2s, which will be the fastest growing, sort of segment of the economy, that, that they sort of lost it, right? And that they're sort of relegated to, Ethereum mainnet or some of these other places. And so that was the bet. And I mean, it's really actually quite amazing, like how powerfully it played out. It looks obvious in retrospect, but it was not obvious in the moment. And we got like a ton of shit sometimes for some of the decisions that we made, but I think we feel very validated now.
So after Velodrome, were you thinking, of course there was some time in between that, but were you thinking like, okay, hey, we can recreate the same model and find a chain that is very L2, et cetera, that's very promising, and we can solve this issue of kind of become the connective tissue for this ecosystem? Or again, was it more like lucky in some sense?
Yeah. So I think, we partnered very closely with the Optimism team. And so, the journey was, Optimism shifted a bit, from our focus is going to be on OP mainnet to it's going to be about building the OP stack, right? The underlying technology for L2s. And it's going to focus on scaling this network of chains called the super chain, and then building the interoperability technology that will connect these chains, make the experience of these chains feel as cohesive as a single chain, right? This is the thing that is really the end game for the Ethereum scaling roadmap. Is we don't want all these L2s fractured. We want them unified and to feel cohesive. So when they did that, of course, the first big partner that they worked with was Coinbase, right? And Base. And this for us was very like obvious in the moment of you've got one of the world's, if not the world's, like most successful consumer crypto companies, saying that they are going to bring their business on chain. And in fact, that it is like mission critical for them to bring their business on chain. And they're going to do it not via permission blockchain, their own blockchain. They're not going to build on these alt layer ones. They're going to do this on Ethereum on the OP stack. And so this was a no-brainer for us that like this was going to be a network that was going to see a ton of growth. And so then it was just a matter of like basically like what do we launch there, right? And it became very clear to us that Coinbase was going to pursue this like very vertically integrated strategy, where everything was going to be very connected, where, you know, users of the Coinbase core applications were going to be using on-chain rails to do things like you've seen probably the product, the Morpho borrow lend, right? You can borrow against your Bitcoin right now on Coinbase.com. All of that's happening on-chain, but you as the Coinbase user wouldn't know it. So it's this vertical integration. So we need a DEX that can basically focus on vertically integrating with the Coinbase stack on Base. And so that's why we launched Aerodrome there. I think Aerodrome also made a ton of sense from another angle, which is just that Base was not going to have a native token. And this is another reason a lot of people faded Base initially, is they thought just, you know, how will they win if they don't have hundreds of millions in paper token money that they can like hand out to people, right? They ignored the distribution. They ignored how well capitalized Coinbase was. They ignored all the other advantages, but they looked at that. And so another role that Aerodrome in this particular model was able to play there is like that economic engine, in that, you know, Aerodrome is emitting tokens into this ecosystem, acting as a sort of economic stimulus for the broader ecosystem. And so that was the idea of basically why we would have like Velodrome stays focused on the superchain. Velodrome's now on 10 chains. Superchain interoperability is coming very soon, so it is scaled horizontally. And Aerodrome was this vertically integrated DEX specific to Base.
I definitely want to talk more about tokens and tokenomics shortly, but you know, making a successful DEX is quite hard. You've made two, so you know, like how like what's the secret sauce here?
This goes back to the idea of the DEX trilemma to us. So fundamentally, the job a DEX has to do is align the incentives of three groups: traders, liquidity providers, and like users of the token. Traders fundamentally just want the best execution on their trade, right? And they're mercenary about it. They'll use an aggregator. They don't really care what DEX offers it. They just want the best execution. So to be a winning DEX, you have to offer best execution. Liquidity providers are important because they're the ones putting up the liquidity for the traders to do that. Liquidity providers are also very mercenary. They just want the best compensation for the risk that they are taking on in providing liquidity. So you need to give them sort of the best rewards. Users of the token are also very important. And this is just a brief aside, but it's like one big learning in the history of DEXs is that if you put a DEX with a token up against a DEX without a token, the DEX without a token can just offer its LPs the reward of fees. If any DEX can offer anything beyond that, liquidity providers will migrate because they just want the best reward. So you have to have a token as part of a DEX, but a token has to be maximally useful. We saw this with like the sushi swap vampire account took like 50% of Uniswap's TVL in a week, right? Which is why Uniswap moved very quickly to adding a token. But the problem with both Sushi and Uni is that those tokens had no real utility in the systems. And so, you know, their ability to be a part of this trilemma, right, and align the incentives is still sort of separate. So I think the key of the MetaDEX model is the way in which traders get the best execution, because liquidity providers get the best reward. Liquidity providers get the best reward because you're emitting new tokens to them. Those tokens represent basically the total amount of like fees and everything that the DEX captures. So it's able to sort of like capitalize those total rewards and provide them back as incentives. And you create this balance between the three groups where all three of them are getting the best version, the best outcome here. And that's what makes it very different than like a Uniswap. That's what makes it very different than a balancer. That's what makes it very different than even a Curve, although you do want to give a lot of credit to Curve because they began to pioneer this model. But I think the version of it that we have is just even more streamlined and solves these problems in much more effective ways. But I think that's the core of it. Align the incentives, be sure everyone's getting the best version of the thing that they need, all in one sort of streamlined design.
Very cool. Yeah. So tokens, I mean, tokens can be used for so much, but they're essentially incentive mechanisms in some sense for whatever behavior you're trying to encourage. You know, you said that tokens should be maximally useful. I guess, you know, the way you're explaining it, you're aligning all these different parties and their incentives through this token. But like, can you describe that in more detail? I want to know how. Explain how the token economics are working in, for example, Aerodrome today.
Yeah. So, I mean, the best way to frame this is like, if you look at the history of DEXs, right, and we can go back to that like sushi swap vampire attack, or a million different permutations of DEX plus token. What happens, right? DEX launches, add token, they vamp a bunch of liquidity, but what does the token do? Governance? It's a meme coin. All right. So if you just keep emitting new meme coins out into these additional rewards, people dump them. And then as soon as it's not worth anything or they run out of the tokens, right, then the whole thing spirals down, right? The token goes to zero. So when we talk about like a token being maximally useful, the Uni token is a governance token, but even its ability to actually govern is a bit fuzzy because it looks like equity stakeholders can veto the only like real power it has, which is like turning on the fee switch. So a meme token, essentially. Our token is maximally useful because 100% of the productive value of the DEX is redistributed as incentives to lockers of the token in exchange for their participation, right? It is not passive. They have to show up each week. They have to vote in such a way that optimizes the DEX, and they are incentivized to optimize the DEX for maximum sort of utility. But that's what we mean. If you are going to emit a token as a reward, it has to be maximally useful. Nothing can be left on the table. Like so many projects still will like use permission mechanisms to direct to the team or to the DAO a percentage of the like fees, right? That's not really DeFi. That's a business. Uniswap right now, right? Their front end fees go exclusively to the lab entity. No value flows to the token. No value flows to the DAO. No value flows to the foundation, right? And these aren't. This doesn't feel aligned with the principles of the space, and so the token, like, it's not only aligning the incentives of the different participant groups in that DEX trilemma, but even in this case, like the team and foundations and contributors that support these protocols, they have no permissioned access to the revenue, right? They have to participate like any other participant and earn incentives through that participation like anybody else. They don't have like private token allocations to go sell. They don't neither Velodrome or Aerodrome ever raised any money or sold tokens to VCs. The only way teams are supported are the same way as any other locker is supported, right? It's through participation in the system, voting each week, earning rewards. And that's the sort of like incentive alignment that I think is like so powerful. And it's why like organizing around a maximally useful token is so important.
Very cool. Okay. So I'm going to totally butcher this, but when the people are voting escrow, so that they are locking in their tokens to participate in these votes and this governance of the protocol, the objective is to because every week are there so many changes or potential updates where the people are the voters are that active every week? Because I would imagine there's probably not upgrades or major updates every single week, or are there?
Yeah. So, I mean, the big thing is that, so this is I'll go back to the history of Curve a little bit, right? Because Curve pioneered this idea of the VE. So, you're going to emit a token to a liquidity provider, and that token can be locked. And in locking it, you now control the distribution of emissions. So you can vote on which pools get emissions and are incentivized. But on Curve, basically all 50% of the fees go back to lockers versus 100% our model. But everybody gets the same sort of cut proportional to the amount that they've got locked, right? So if you voted to direct, let's say, $1,000 in emissions to a pool that made $2,000 in fees, that was a very efficient vote and way of distributing emissions. But if you voted and you sent $1,000 in emissions and the pool produced $100 in fees, that was very ineffective, right, for the system as a whole. Now, those two voters get the same reward at the end on Curve. In the MetaDEX system, you only get the rewards for the pool that you voted for. So in people voting each week, what they are doing is the total amount of rewards available on each pool is very variable each week, right? So they are voting for the pool that will give them the most reward. And in doing so, they're basically ensuring that the emissions are always flowing, right, to the most productive pools. And in enabling that, it's better trading execution on those pools, which means more trades, more fees, which means better execution, which means, more liquidity, and sort of the flywheel spins. And so that's a very important part of why people are showing up to participate each week, is because they have an incentive to do so. And they're, by virtue of them doing so, they are making the DEX more productive. They are adding value again to the system.
So it's lock token, participate in vote, and be rewarded, right? Is that kind of the very simplified flow?
Yeah.
And for the locking of the tokens, you can lock the tokens for a few days or up to years, and then the output of the rewards will be higher. Is that accurate, or how does that work?
Yeah, you can think about it. It's like a bonding curve. So if you lock your token for 4 years, and let's just say you lock up 1% of the total lock supply, right? That 4-year lock, you will basically be able to capture 1% of the total rewards available. But if you lock for 2 years, you basically have half the voting power, right? So it'd be more like 0.5, right? And if you lock for 1 year, it's a quarter. So you are incentivized, right, to lock for the longest duration and to maintain that lock if your goal is to basically maximize reward capture. And the interesting thing is that the economics of this actually work very well, because over 95% of the Aerodrome locked tokens are locked for 4 years and are continuously relocked for 4 years. And so it's why when we talk about token supply, you can think about the locked supply as being functionally burned from a circulating standpoint, because again, over 95% is 4-year locked, and people keep it 4-year locked, and those tokens are never re-entering recirculation because people have every incentive to keep it maximally locked. And one, again, shift over the Curve model is that your locked positions are represented within a NFT. So you can still go on secondary markets and sell your locked position, but you're not able to sell those tokens into a liquidity pool, right? So it's kind of the best of both worlds. You're incentivized to maximally lock, and most people do that, to keep it maximally locked. But that locked position is still fungible, right? And you can go on an NFT exchange, you can OTC it, you can buy or sell these locked positions. So you're not even locked into the lock, but the tokens are definitely locked into the lock.
That's really cool. Wow. Okay. So how did you come up with the system? And also, how did you model this? Are you building some gigantic spreadsheet to, if else, or, if when XYZ statements, and just constantly, building branches and branches of these different potentials of what could potentially go wrong or what could potentially go right?
Yeah. So, I mean, the credit for the overarching like vote escrow model, right, and the 4-year lock model, I mean, that goes to Mitch, right, and the Curve team, right, because they pioneered this idea that like, you know, you want to basically align, like, give more to the people who demonstrate the like more alignment with the system. So that's what the locking mechanism is, right? If you are locking all those tokens for 4 years, it's maximal alignment, right? So you should get maximum value back by virtue of that participation. And then, you know, Andre maintained that system in solidly, right? The 4-year lock, but that's where you introduce these like innovations of it's locked into a VE NFT, or you only get the rewards for the pools you vote for. So it's basically solving some of the issues that were in Curve. You know, you could think about Curve as like V1, solidly was V2. And then what we've done in MetaDEX is that particular component of the economics we've just largely maintained, right? There's been a lot of other stuff added to the model, but that core aspect of the economics of it has been maintained. And we've looked many times at other models. So do you shrink the time duration? If you shrink the time duration of the max lock, right, maybe you get more locked. But then you have to start worrying about more people having an easy, faster vesting if they do want to exit. So then you can't think about it as burned. And so that is where, you know, we've got economists like on our team, you know, been around from the very, very beginning, who anytime we looked at other potential models, even like a liquid staking sort of model, that the economic implications of it, the downstream implications of it, just look like it would create more like net negative outcomes for the system versus what we have now, right? And so that I think that is why, you know, it's been maintained in Velodrome and Aerodrome, the sort of 4-year locked VE NFTs. We haven't sort of done anything to mess with those like core economics.
All right, so let's pretend the complexities and the kind of the knock-on effects of you changing the tokenomics would be seamless and easy in this hypothetical question. What is one thing that you would want to add, if any, to the perfect token model? If you could just absolutely make it, this is 10 out of 10, amazing, you know, and let's just pretend it happens right away, you know, wave a magic wand. What would that be?
So, I mean, there are some interesting things that like we're actively talking about, right? So we've described the way in which the system creates like a really interesting incentive alignment, right? In that the team is an equal participant within the other, you know, participant in the system, and their incentives are aligned with, you know, continuing to drive as much activity on the DEX, as many rewards through to the DEX, to lockers, of which, you know, they are aligned, they are supported off of that. And so when we think about like the design space that opens up, we just think about adding a lot more sort of value into the system that then can be distributed as well to lockers. So if you think about a DEX, right, a lot of stuff gets built on top of a DEX, and a lot of stuff in particular unique to our model, right? So in the Curve ecosystem, you know, you had Convex, like a liquid locker, right? Was built on top of Curve. And then on top of Convex, you had Vodium that was built then. And this was like a automated vote optimizer. And Convex takes a little bit of a cut, right? And Vodium takes a little bit of a cut. And no shade to these platforms at all, because like this was like real innovation. They did something really good, and they deserve to be compensated for their work. But you are just taking little slices out of the pie, right? Along this. Then you have things like auto compounders, right? Where you're going to take your LP deposited in something. All that auto compounder is going to do is like auto claim your rewards, compound it back into position. But they might take 1 to 5% from you in the process of doing that. We mentioned Uniswap adds a front end fee, right? And we've learned that users are actually willing to pay a front end fee if the experience is good. But that's going off to a private entity in Unilabs. You have, there's a bunch of other products you could think about. Anywhere there is like value being created on top of the DEX, you can just internalize these things within the DEX. You can charge far less, And rather than it exiting the system and creating like no value back in, basically being like rent being taken out, you can just recirculate that through. So I think the big thing that we're thinking about is what are those additional streams that you could add to the model that would put even more revenue into the system, which means there's even more incentive for locking, which means every token that is emitted is all the more useful because now it's not just DEX trading fees and incentives, it's auto compounding fees, it's front end fees, right? And that means like if that token's even more useful, liquidity providers are willing to come in and farm it even more, which means better liquidity. And so, yeah, that's the big thing is we want to internalize as much of the value that is created on top of the DEX, direct it all back at that core economic engine of the DEX, make the token even more useful. And then that further fuels this flywheel.
That's amazing. Wow. All right. So you mentioned these locked tokens, and you mentioned that they are NFTs and they can be traded on secondary. Do you foresee a future where there's going to be this will be like a thriving market of these types of assets? I don't know, locked token voting positions. I don't know what you call it, but do you foresee a future where that's like a very common thing that people are trading?
Yeah. I mean, it's happening right now. There are these secondary markets. I mean, you can do it on any NFT exchange, but there are NFT exchanges that have been built explicitly for this purpose. This is, by the way, another one of those things that we could build natively into it, right? And recirculate the value straight back into the system versus, you pay 1 to 5% to trade the NFT on a third party platform. But there's also even more innovation around like, can you borrow against your VE NFT, right? And the rewards that are being claimed from your voting are being used to like pay down your loan. And so, yeah, there is this like composability that is unlocked by the VE NFT that unlocks all these additional things that makes those locked positions even more useful. And yeah, it's a rich ecosystem. And I think there is like a lot more to do there. And there are things like that we can literally build right into the base layer to like unlock that. But like, I mean, we've seen multiple 7-figure VE NFTs, right, come up for sale. And they go fast, right? These secondary markets are very efficient. And that just adds to the overall health of the economic system.
Very cool. All right. So there's a recent tweet. It's either from your Twitter or potentially from the Aerodrome Twitter, but it said all-time volume surges past 200 billion. It took 1.3 years for Aerodrome to reach the first 100 billion in volume. Less than 5 months later, it's done it again. All right. So where's this growth coming from? I mean, these are outrageous numbers. Is this just because Base is getting super popular, because Coinbase is getting more popular, or just this model that you've designed with Aerodrome is just so friendly towards the users and participants that people are just, clearly like love it?
Yeah. Yeah. I mean, it's both. I mean, again, it goes back to the beginning, right? This incentive alignment. If you are core infrastructure for an ecosystem, then your fate is very much like tied up with the ecosystem, and the ecosystem's fate is tied up with yours, right? It goes both ways. So obviously Aerodrome has done like a massive service to Base, right, in making it very easy for any project deploying on Base to build sufficient liquidity, giving them all that like strong basis on which that they can grow. And by virtue of them growing, more activities coming through the DEX, right? It's very, very powerful. But beyond like just that, Base is growing so fast, right? Like it took 1 year for Base to basically flip every ETH2, which is insane, especially when you think about what the vibe was on Base of this is a Fed chain, they won't have a token. In 1 year, every major, well-funded, every like incumbent advantage just crushed by Base, right? And they're up there number one. So it's grown very, very fast. And just look at what Base is focused on. They're focused on making the chain as cheap as possible, right? They keep pushing the gas target. So it's cheaper, which means more activity, more transactions. They are making it faster. Flash Blocks is in the process of being deployed right now. So 10xing block times, faster effectively than Solana, right? And that leads to more and more activity. And they're also doing this work, which is so interesting. Like deploying more Coinbase assets. So when Base deployed CBBTC for basically the entire history of on-chain trading of Bitcoin, it happened on Ethereum mainnet, happened on Uniswap, and the primary asset was WBTC. It took 1 to 2 weeks before Base flipped that, right? And now the top pool, the best execution was on Aerodrome and Base. And now they're going to roll out a bunch more CB assets. So they're going to make it the best place to trade all of these majors. And all of those compounding effects, and they're, focused on growing FX on chain. They are integrating Base DeFi into the core product app, which again is basically giving distribution to DeFi. Think about the millions of Coinbase users now passively using on-chain products without even needing to know that. That is a huge part of the success. So it's a combination of, I think, the best DEX product, basically being in the best ecosystem. But even Velodrome, anywhere Velodrome is competing, almost every chain it's on, right? About 10 chains. It is the number one DEX, right? It beats all of the big incumbents. And so it just goes to show ecosystem size matters. So I think some of those top line numbers, because obviously if Base wasn't growing, Aerodrome's growth wouldn't be the same. But in terms of the amount of the pie the DEX owns and the amount of help it fuel it adds, the model is very important there.
All right. So you said flash blocks and, hopefully making Base faster than Solana. Kyle Samani, one of my friends, he says that the future of Ethereum is Coinbase. What are your thoughts on that statement?
I mean, I don't think that the future of Ethereum is Coinbase because of what we talked about, right? The future of Ethereum is 100 companies having built chains that are as powerful as Base. And by virtue of Coinbase, of sort of writing the game plan, showing the results, right? That's how you attract them to follow their sort of playbook. But I also know that the subtext of that is just how dominant Coinbase is and things like that. And it's just why is this a bad thing? We had a Fortune 500, one of the most successful crypto companies in the world, one of the most well capitalized. We're talking sitting on billions of dollars of cash. Where are they investing it? They're investing it in building on and scaling Ethereum. And by the way, they're active contributors to the Ethereum core stack, to the scaling roadmap. And the fact that they are showing just how fast and powerful and how aligned they are with Ethereum is a good thing. And so I would frame it as the future of Ethereum is Coinbase, and it's a bunch of others too. And I mean, honestly, Kyle, why didn't they build on Solana? Don't you wish?
That's fair. That's fair. So, do you think that DEXs in the long term are going to overtake CEXs and just become the dominant form factor because of these better aligned incentives and whatnot?
Yeah. I don't think, I think they're going to be very complementary. So Brian Armstrong has said, publicly that the next big focus for integration of the Coinbase core app and the on-chain economy on Base is DEXs, right? And why is this important? They have gotten a ton of flack around listings, right? Why isn't this token listed? You guys are moving too slow, all this sort of stuff. And functionally, if they do want to be that front end of crypto, it is very important that they have everything there that people want to trade, that it's there as fast as possible, that it's easy to use, because again, people don't really care. Normies don't care. Traders, they're just going to go to a front end and try to get access to it. They don't understand that there's order books and market makers. They don't care about any of that. They don't care if it's coming from a DEX pool. They just want to trade it. So I think what Brian sees is that DEXs have the ability, right, to permissionally spin up markets for new assets. And the number of new assets that are being created at any given time is just accelerating exponentially. And it will be impossible for any sort of traditional organization to keep up with that. You think about all the legal and regulatory overhead associated with like token reviews. And honestly, I'm on their side because, somebody spends a lot of time looking at different tokens. People are like, why isn't this token being listed? I'm like, because it's got some issues in the token distribution, or, it's like, or that looks like a security, or, like there's all this sort of stuff. Lots of good reasons why they're not listed, but by integrating together like the centralized exchange and the decentralized ones into a central UI, you get the like best of both worlds, right? And that's not even like disruptive to Coinbase's business model. In fact, that amplifies it, right? Because they can still take fees on every transaction. But they now are able to surface to their customers things that they were never able to surface to them before. Just like they can't offer a direct Bitcoin loan product, but they can integrate on-chain rails and put it in a front end. They can't list every token, but they can integrate on-chain rails and surface that to their customers. So I see the future as being very complementary here.
And how do you think about building a moat within the world of DEXs? And I guess if I had to take a stab at what you might say is making the most elegant aligned token, token economy protocol design possible. Is that like the answer?
Yeah, it goes back to the DEX trilemma. Like, you cannot boil the problem of DEXs down any more simply than the DEX trilemma. You've got three stakeholders. If all three stakeholders are getting the best version of the thing that they want, and the incentives between them are aligned, then you've got the best model. And the issue for any other DEX that would try to like come and compete with this model is that you're going to have to dial something on one of those quadrants of the trilemma slightly differently. But what could you dial that's better than, like all the fees, go to the token. The token goes to LPs, so they're best rewarded. LPs give the best liquidity to the traders. The traders then trade even more and give even more fees. Like, there's no more maximal approach of a incentive alignment between these groups. And so it would really come down to like a new innovative AMM or something like that, connected to the same sort of trilemma argument, right? And that's why our system's built to be modular, in the sense of, if there's just a new, really disruptive version of concentrated liquidity. But again, that's another hard problem of how you make it better than concentrated liquidity. And this is why I think like UniV4 wasn't AMM innovation, because like they probably looked at it and said, there's not much more you can do here. But even if there were to be something, you just plug that into our existing model, right? Because we already offer stable swaps like Curve, you offer UniV2 style pools, and you offer UniV3 style pools, right? So you could add another AMM type. And I think that's why the moat, what is most important is that alignment between the three groups, being sure they're all getting the best. And in the end, the DEX that will always win is the DEX that has the most liquidity in that active tick. That means every aggregator is going to use that DEX. That means Coinbase front end is going to use that DEX. That means AI agents are going to use that DEX. And that's why we've also resisted like the urge, it feels like Uniswap started to think like, oh, we should be a front end company. We should be a wallet company, right? We should own the user. And then you go, well, you're going to be better at doing that than Coinbase or Robinhood will be. But again, we're glad you maybe looked away from the rails, because we think we'll create the rails whereby, because of all these incentive alignment things, every front end is going to have to use us, because it is like fundamentally the best execution.
Yeah, I mean, it really seems like the model that you've created is like the closest thing to a true utility that we have within the ecosystem. So it's very, very impressive. All right, Alex, this has been, first of all, I can't believe it's been an hour. Incredible. The time just flew by, but this has been amazing. It is time for the closing questions. All right. What will the price of Bitcoin be 1 year from now? This is going to be in May of 2026.
I don't know. I'm so bad at price stuff, which is also why I love being a builder versus a trader. I just love that people are arguing about price via trades, and you know that benefits the product. But yeah, I say higher. I'll say 200K.
I like it. Very good. All right. If you could instantly master any new skill that would help you in business, what would it be?
I mean, it's one I'm already trying to get better at, but it's the AI, Chat GPT. The capabilities of those systems are growing so fast, and when you do tap into it in some of these really powerful ways, it feels like honestly a superpower. It's crazy. That shit's going to change the world, and yeah, I want to get really good at knowing how to use it and how to leverage it to make me better and everything I do better.
Is this more from a development standpoint, like software development standpoint, or is this more from like a running my business as a my accounting, my tax, my handling my people? Like, is that more of that standpoint?
I think it's everything. I think, I've had a friend deep in the AI space for a long time, and I had a conversation with him because he's starting to basically consult with companies on how to leverage it. And what he opened my eyes to is that you should basically have a project running in GPT for everything, for your health, for your business, for any hobbies. And you should use that as your front line on everything from, I don't know how to do something, to help me do it, to help me learn, help me grow. And yeah, so I've like only in the last few weeks, I've like started to, I think, do another big deep dive through it and try to like adopt that mindset he gave me. And so far, I mean, I've been floored, right? From the personal side, from the running a business side, to like keeping on top of stuff side, like it's wild. And I feel like I'm just scratching the surface.
It's such a great idea to have a project per each category, and eventually having those be able to combine in some seamless manner. Yeah, no, it's gonna get crazy. All right, do you have a unpopular opinion that you hold about startups or building companies?
Um, yeah, my unpopular opinion is that far more crypto protocols, startups should bet on maximal token utility. That they should basically not raise funds. They should not sell tokens. They should not allocate themselves tokens to sell later. That they should bet their entire house if they're going to go out and say, this is a good product, this token is useful. They should bet on it. They should show that alignment. It's not easy. It's very hard. I mean, it was a scary journey for us, and it is different depending on the model. But from a sort of like first principle standpoint, my unpopular opinion is stop raising, stop allocating yourself tokens, stop selling tokens, stop doing market maker deals, stop doing all this. If it's useful, use it and scale yourself that way, because you will make different decisions. Your incentives are so messed up if you and all your early contributors are sitting on all these unvested tokens, and the only way for you to be realized is to sell them. But then you're also looking at your investors and if they're going to sell. And I probably wouldn't even like working in this space if we had made different decisions, because that sounds stressful. Although some people think I'm crazy, because a lot of people get really, really rich that way, even if their products die or don't go anywhere, and they're sitting on a beach. But I need to sleep at night. So
I love that. That's great. All right, you are not allowed to work on Web3. What would you be working on?
Well, I will say, like, I don't think there's anything like in the business world that will ever be interesting to me after working this space, right? And the amount of like freedom, autonomy, decentralization, it's like anything. I honestly think if I ever do anything else, it's gonna be like, I've got a cabin or a resort, or like something very like tangible out there in the world, scratching an entirely different kind of itch, because this feels like the ultimate space if you're interested in building things, systems, companies. It does not get better than this.
That's great as well. All right. Last question. You go back in time before starting your entrepreneurial journey and give yourself one piece of advice. What would that be?
Trust your gut. I think especially when you're a new entrepreneur, when you're new to an industry, and things like that, you do a lot of self-doubt. You assume the people who have been around longer, who have done this particular thing before, that they know more than you, that you trust their intuitions over your own. And I think like some of my biggest mistakes along the way have been like my own gut, my own sense, like screaming something, but me being deferential. And then like eventually realizing that, I was right, but I didn't have the confidence yet to really assert that. And so, yeah, I think that's the advice I'd give myself. Really trust your gut. Like if this person doesn't seem right, trust your gut. If this like path doesn't seem right, trust your gut. Like, do not just sort of go with what somebody seems more experienced or wiser or whatever says. Like, trust yourself.
Love that. Alex, thank you so much. This has been incredible. Where can people learn more about yourself, learn more about Velodrome and Aerodrome?
Yeah, you can certainly find us on X. So I'm at Wagme Alexander on X. Aerodrome is at Aerodrome Phi, at Velodrome Phi, and you got the links there to our websites, to Discord, and all that fun stuff.
Amazing. Thank you, Alex.
Thank you so much.